in full disclosure, I have shorted Nvidia. I'm getting crushed right now. I haven't looked at what it is, but I'm getting crushed. Nvidia's all-time high is 346, and it's coming close to that. And that was in November of 2021. Listen, we don't really care much about reported earnings in the sense of making or breaking our thesis. The thesis is what it is. If you look back at history on companies, they don't always beat, and that's okay because we still want to buy good companies at good prices, and sometimes they beat and sometimes they don't. But as long as in the long run, they hit the metrics in which we have assumed, we can make a lot of money. The interesting part is I shorted Nvidia with options, which means even if Nvidia stays at 340, I could still make money because my bets are if they go to like 380, 390 or higher, then I start losing money overall. Right. But based on where it is today and how far out my outlook is for Nvidia, it'll be pretty, it's got to take some time. It's going to be pretty bad tomorrow. But again, if I believe in my thesis.
Today, folks, I'm going to share with you who I think are the 3 biggest clowns in the market. If you listen to them, you're going to lose all of your money or damn near a huge percentage of it. And this has become the casino at this point, folks. This recessionary environment has led to absurd stupidity, absurd volatility. I'm going to share with you what I think is happening here, how these clowns are approaching it, and why people are following them like lemmings. That's going to lead them to basically run off a cliff, because I've taken a huge step back, a huge breath. We're going to talk about all of that and more. So consider hitting that like button, because let's talk about the 3 clowns. And these 3 clowns, I think, are going to persist to be the worst investors on the planet. That's everything money, financial education. And we're going to be talking about Chamath Palihapitiya here. These people are absolutely insane on all kind of metrics here. So everything money, this is a channel that says all you need to do is cost average into an S&P 500 index. But hey, while you're here, listen to us buying Alibaba stock. Listen to our fundamental tools that you're going to pay a monthly fee for, because they're going to tell you exactly what good long-term investments look like, even though they haven't been able to predict a good near-term or long-term, as far as I can tell, investment. And here we got Paul that shorted Nvidia stock because he uses fundamental tools that he wants you to pay for to prove why it was the biggest short. And taking a look at Nvidia stock here, guys, there was some insider crap going on. I'm telling you that right now. Nvidia, this is a stock I've never wrapped my head around. I bought Taiwan Semiconductors. I made a bit of money. I sold out of it. I should have held it. It hit like $100 today, but nobody would have known this was coming. Somebody did, because this stock pump that's happened here that got to the insane valuation that led everything money to short it. Clearly somebody knew something. Somebody was working on the ground floor of Nvidia. They saw these Q2 orders coming in, and they knew that the guidance was going to get raised from $7 billion to something absurd, which is now like $11 billion, and the stock popped to 380, which completely wrecked Paul's evaluation of this company. Because you just can't predict this turn wheel. I mean, out of nowhere, these companies can change. Now, obviously, I think the AI hype is kind of getting out of control here. AI is what crypto was a year ago, what was the MJ market back in 2018, 2019. It's just, there's always these other pump markets. Now, don't get me wrong. I think AI has huge potential in the future with self-driving, obviously, with all kinds of aspects of the market here. Adobe's been releasing artificial intelligence software to, help you edit your videos better, Palantir. But these things aren't there yet. They're not worth these absurd valuations today. It's coming, don't get me wrong, but it's like every year we get these crazy pumps, right? And this is just one of them. And you can't predict these things. You get lucky. It's purely gambling. And I still think somebody knew something to get to this point with this stock. But everything money, I think they're the biggest clowns on the internet. You got Trader Mo here, a guy that literally is a day trader, and somebody that uses a fundamental tool that has never been able to prove to work properly. I mean, you just can't sit here and base numbers off the future. Now, financial education. This dude is a guy, his bullish thesis on the market is short the Dow, buy the Qs, buy these tech companies, even though they've rallied absurdly this year. So short the thing that's down, buy the thing that's rallying. And his bull thesis is purely because, hey guys, they've done layoffs. Guidance fundamentals, they're going to get slightly better. Not because the companies are really growing that much, but primarily just because, hey guys, they're making their margins better from layoffs. Like, I just can't get over this. And people listen to these guys, and they're buying what these dudes are buying, and they're pumping it all up to the moon, and they're going to lose a lot of money. I mean, this guy is going to, in a market like this, people that get in late are always the first to get out, and there's going to be a lot of those people, I think, coming down the road. So let's listen to Chamath Palihapitiya here, and just listen to the insanity that continues to go on. The gambling addiction is strong with this one.
I'm still long Microsoft and Google and short the rest of the big tech, so I'm fine with it.
There you go.
Back to the stock price.
Chamath, do you think that the Google long Netflix short play is the right play?
I think the best trade on the internet, the most obvious, simple money-making trade is long Microsoft, Google, short big tech, short the rest of the big tech.
Short IBM, short Netflix.
No, 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 no.
everything.
Short. No. Meaning you can very comfortably short Apple, Facebook, Amazon, Netflix, and be long Microsoft, Google. So as a spread trade,
Right.
it's the best risk parity trade on the internet right now.
How? Who says that? Who comes up with this analysis? It is the best you could possibly do in the risk analysis in the market, right? What the is this guy talking about? So taking a look at Microsoft here, I mean, Microsoft, yeah, ChatGPT, it's got a lot going for it. Revenue numbers are great. The thing's blowing up right now, almost all-time highs. Google, another great company. But would you really buy those two and then go ahead and short Apple, short Netflix? I don't like Netflix. I think you could short. I don't really care what Netflix does here. This thing's pumped pretty good though too. And Netflix has really come off some of those recent lows, up 23% year to date. You got Meta here. Meta's just exploded off those lows. It doesn't seem to stop. And short Amazon. Why? Just why? I love this as entertainment value 100%. I mean, it's so fun to watch people take these bets, and I want to get involved. It's hard not to look at your portfolio and be like, hey, if I've got a few $100,000 and I just threw it all in Meta at 90, or if I just threw it all in Amazon at the low here, I mean, I should easily be able to make 50 or 100%. Like, how did I miss the Nvidia trade? You start feeling like you're an idiot. And I think it's important to point out that what we're getting is an environment right now where money doesn't have a lot of places to go. And what do I mean by that? Well, let's use the stocks that are falling. You got Home Depot, you've got the financial sector. These are the sectors that I'm more intrigued by because they're the sectors that are getting clobbered. And what's happening is they're lowering their guidance. We're seeing cash flow, revenue growth slow down in those areas. So when things are in the downward trajectory, the market tends to over extrapolate that into the future, right? And now what we're seeing is the opposite with tech, because tech has done some layoffs, because tech is seeing, again, we're not talking about explosive growth. Everything for these big tech companies has slowed down dramatically, but because they're the ones that are being able to play with their margins a bit better, we're starting to see them slightly uptrend, right? We're starting to see a lot of these tech companies, Shopify, all these companies that are saying, hey, like things, they're not as good as they were, but we're making them better on the bottom line. And that is getting well over projected into the future. So we're getting this kind of disparity. And those companies that I think are getting sold off right now is where the value's at. These bank stocks, things like the stocks that you're seeing in like SCHD. And you're seeing even the likes of Ray Dalio started buying Home Depot and some of these companies, and they're just becoming so hated. And inevitably what happens is the same thing that happened with big tech. These things will become overvalued, and eventually they'll start cyclically floating to the next companies that are starting to see the price disparity come back to them, where all of a sudden the guidance starts to shift. All of a sudden they're leveling off. They're not seeing these new lows of like cash flows anymore. All of a sudden the banks aren't putting crazy loan loss provisions aside, and all of a sudden that money will start to shift back over into that direction. And honestly, I'm thinking about just setting up a dividend reinvestment plan, and just putting my hands up, stacking some cash, putting it into some high interest savings account, and just wait till this is all over, because I missed the 2012 to the 2019 market. Things just made sense then. Things were expensive, but the market, you go look at some of the revenue growth numbers, and everything was just consistent, and everything was nice, and it was just great. Yeah, we were in a lower interest rated environment. We went through the Trump presidency. There was a lot of weird things going on, but it was just, things were just fluid. Things aren't fluid anymore, folks. And sometimes I just think you got to get on a vacation and walk away and come back in a year or two, because I feel like if you watch this too often, you're going to make some really bad decisions, and it's not going to be good for you in the near term. I'm sorry. It's just the way I think it's going.